Now, the gap fill statistics for Tuesdays are the best day to anticipate a gap fill over the last 180 days. 79% of our gap fills have filled over the last 180 days. 74, it's in second place over the last 90 days, 74%. And then 83% of our gap fills have filled over the last 30 days. You'll notice something else very important here is that the half gap fill has an 89% probability on Tuesdays over the last 90 and 180 days. Now, there's very few things in the market that happen 90% of the time. So in the direction of that half gap fill, where would the half gap fill be if we opened up right here, right now? It would be down here at the 66. And I'm just going to make that mark there. Why is that important? Because as we're going into the first opening moments of our bell, and we're looking at this from the perspective of, if the market's going to move a 90% probability, it moves in the direction of the half gap fill, then what's above us on the indices that would lead us to the direction of the half gap fill, and what's below us on the VIX. And when we're looking at the VIX here, and we're looking at the extension shorts that we had yesterday, as we're going into the 12-15 time frame, this VIX profit target is very close to completing here as we're going into our morning. It hasn't completed yet, but it is a 65. Our low is the 70. And if we run into that 65 and we see a bounce as we get into our morning, what would that also create for the indices? They would potentially roll over out of their highs and in the direction of the half and potentially the full gap fill. Look what else is above us here on the ES in the form of the half gap, the previous highs of the week. So those levels, and then you also have the 30 handle above. What is our low down here? Well, we had a 30 handle below and the halfway back long for the week. And now we're all the way, we've rallied 60 points plus from that low all the way to a 30 handle above. Now, it's very important that at 9:30 that we note whether we're opening up below that 30 handle. Why? Because that starts to erode the gap fill statistic from the perspective of being above the 30 handle. There's only a 35% probability of going the rest of the way into the fill. So what that means is that if we open up inside of the 20 handle, then we have an 89% probability for a half gap fill. That's a great edge. Underneath that 30 handle, there would be a 54% probability of falling the rest of the way into the gap fill. Now that's only a coin flip. It's a slight edge, right? But given the day of the weeks have been very, very good, I think that we could make a decent case of falling the rest of the way into the fill. But what would happen if we opened up outside of that 30 handle? Then there's only a 35% probability of filling the gap. And on days like that, like this, where you have a very high probability for a half gap fill, but there's not an edge towards the full, and again, that would happen if we opened up above the 30 handle. We're running into that previous high of the week. We open up above the 30 handle, there's a 35% probability. This stream continues at eminiaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.